So we'll get started though. A lot of you guys are here from earlier, some are not. And so in the event that you were not here earlier, take a minute, just say thank you first for inviting me. I really appreciate being here. I really do, because what I like about TradingPub is the fact that this is here for you guys. I mean, and to help you in your pursuit of success in this business. So I work with DTI Diversified Trading and moderate a trade room there. One of the things that we do on the open in the morning is, we try to evaluate the markets for what they are and figure out long, short, or out. And one of the first things that we look at is the trade opportunity right off the bell, if there is one. Generally is. And then not always, though. I'll talk a little bit about that. But then, another opportunity that kind of presents itself around 9 o'clock in the morning. And so first, what we got to do is got to get risk out of the way, because there's some folks in here that were not here earlier, and it's important we talk about risk. You got to know first when we talk about leveraged products, okay, futures products, leverage. Right now we're talking about a $70,000+ instrument or contract that you can control with, depending on your broker, $500 to maybe $1,000 in margin, and so risk involved in trading for sure. Okay, and so with a leverage product, you can actually manage to lose more than you have in your trading account. Okay, so that's a big deal. So we're talking about leverage products for the most part. You can use a little bit of what we're going to talk about this morning for trading some other products, and hopefully I got time to talk a little bit about that and how you can do that. You just convert the average trading range from one instrument over to the other and sort of use the ranges that I'm talking about for for trading the other products. But when I say the open this morning, what we're talking about, it's the 8:30 Central U.S. And by the way, when I say times, when I give you 8:30 and 12:30 and 11 o'clock, I'm talking about Central U.S., not Eastern, not Pacific, but Central. So if you're in the East Coast, kind of do the adjustment. But when I say 8:30 cash bell, I mean 9:30 Eastern, 8:30 Central ring of the cash bells for the trade of the underlyings. The reason I make that distinction is that the futures markets actually open the preceding day at 5 o'clock in the afternoon, 1700 hours. So first thing you want to know, is there going to be news today? Well, there's two different kinds of news. We've seen both of them today. One, scheduled economic events that you can definitely learn to know that are available and scheduled and going to be released, and learn to trade around and protect yourself around. And then the other is what we saw today also, and that was news out of Washington that's not scheduled, that can come out at any time. You never know when it's going to come from or where, but it does happen. It happened yesterday, as a matter of fact, and caused a significant downward push in the market. And today we got just the opposite. We got a pretty significant push to the upside with the news that came out of Washington. So if you want to know about news, I'd go to Forex Factor or Forex Pros. It's up to you. Both are good. Just beware of anything that's listed with a red folder for high impact probability. And if there is going to be news like that, just be aware of it and the markets that it can affect that you may be trading. Here's an example. This is the last GDP, the last US GDP at 7:30 in the morning. And so it was the last really big significant news event that I could find. So I wasn't cherry picking charts. I just went back to the last big one. And these are your 30-year bond futures that trade from a 148 down to a 147 handle in about, 3 minutes, because that's a 3-minute candle. It's a $1,000 move. You'd be real happy if you were short, but you wouldn't be happy at all if you were long. So you need to, the basic point and premise here is just to know if there is going to be news to be released while you're trading. And then I'm going to talk a little bit more about that in just a minute. Okay, just a minute. I'll get to a little bit more about that news at 7:30 in the morning. Outside of that, as you're approaching the bell for the trade of the underlyings, the regular trading hours session to begin, at 8:30 Central, 9:30 Eastern, you might ask yourself, take a step back, is all I'm saying, and look at the forest and don't miss that for the tree that's right in front of your face. In other words, if you're concentrating exclusively and solely on the hard right edge of the screen and looking at, just that one price candle, I'm basically what I'm trying to say is there's a lot more information available to you than just what's going on in that particular price candle. I think that's common sense, but I just thought I'd throw it out there. So ask yourself this: the trade that's about to open. Are you trading inside yesterday, outside yesterday, higher or lower, significantly higher or lower, or maybe inside yesterday's range? If it's dead smack in the middle, it's not telling you a whole lot. It is telling you something actually. It's telling you that it's pretty balanced and happy right where it's at. It's not like it's not like it's saying I'm extremely strong or weak. You open this morning like it did, some 6-8 handles lower than prior session closed, then it's saying it's got a pretty weak market on its hands, and really did. And I was enjoying being short until we got news, and you had to reverse and change like the direction of the wind and be long with it, because the trade was no longer to the short side once we got that news out of Washington this morning. It pretty much triggered right back up to the upside. So ask yourself that question, move to the next thing. Everybody, please have pen and paper to take a couple of notes, because there's no way you can remember all this stuff. And it's really not that much to it, but I think it'd be a lot easier if you had pen and paper to make a couple of notes. So key numbers, and I'm going to show you this on charts. It'll make a lot more sense on the charts, but at least at a bare minimum, and this is really kind of bare minimum, but at a bare minimum, have yesterday's big numbers like open, high, low, and close. Globex, high and low, the after hours session, if there was a higher high or a lower low put in after hours, know that too. Any big numbers that literally just like jump off the chart at you and say, hey, look at, I spent 3 hours trading this, basic pivot yesterday. I guarantee that's an important number, and you ought to write it down. You ought to know about it. And here comes the news back into the fold. That was that, if you're about to open here at 8:30, an hour ago there was big news. Well, how did it affect the market? Was there a significant pivot that was put in per that news event? And I can tell you that, like on the last GDP, it was a swing high on that news. On that, it was trading 1402 pivot, traded up to 1410 on that report, and since then 1410's. Well, it might be, some might argue it's 9.5 or whatever. I don't care about a tick. The basic area of 1410, 1409, 1410 is still important, to this day. It was also the high of the open of the cash session there at 8:30, after having been the high of, of the news event. So I would note those news event numbers as well. I do, and I think they're important, so I offer that to you as well. So you open this morning. It's a pretty good thing to record that opening print. I actually just have it auto-populated on my charts and continue to use it throughout the day. And for instance, this morning, the market opened, the S&P's opened about 1390.5, traded down from there and found some support at 83.84. Well, when they returned back for decision time, and it was right about the time you got that big news, it returned to 1390.5. Spent literally 20 minutes or so there at the 1390.5, which is coincidentally the 8:30 print, before trading higher. And so, I'm sorry about that if I used an acronym and didn't explain it. I apologize. Sometimes I just get on a roll. Sorry. So anyway, basic idea there is, note that 8:30 print. After the market has a minute to flesh out the kind of the market on opens, it'll present to you. Now listen, first let me say this. This that I'm going to share with you is not for everybody, okay? I always say this when I do this presentation around trading around the open. It's not for everybody. Please, everybody, know that this is not for everybody. There are different personalities and risk tolerances and people and ideas and trading, and if your first trade right off the bell smacks you around for 2.5, 3 points in the S&P and that ruins your morning, then what I'm going to share with you this morning is not for you, I promise. Even though it's a pretty high probability trade setup, I can tell you that there's probably a little bit better trade setup, and that'll be the second one that I'll share with you, and it comes at 9 o'clock, because it has a chance to let the market sort of settle out this open, high energy volatility that generally speaking, not always, generally speaking, occurs on the open. So market's open for a couple of minutes. I just say 3 some odd minutes, right? It doesn't have to be 3. It could be 2, 4, whatever. It doesn't matter. But you're gonna see it. You'll see the range, and just on average, call it 3. And what I'm looking for is the market to tell me something. All those market on opens that were flushed, through. We used to have a guy here that worked on a hour-on desk in Chicago, and when they dispatched their guys, their brokers down to the floors to pair up with those locals and carry these huge market on opens into the pits. I mean, you kind of get a feel for what's going on behind the scenes, and it creates this little, I don't know what to call it. I mean, range that I'll show you on some charts that will allow you an opportunity to decide for yourself. A wiggle's good. Long or short, or out. Out's okay. Out's fine, but we'll see on the chart where I think you can pretty much make a decision for the long or short and the risk associated with it. That's important, because I'm going to show you some charts where clearly this did not work and you were absolutely without question stopped out. And it's very important that we look at those, because you have to understand how to realize when you're caught and you just have to get out. Okay, so we'll get to that. The targets, you say, okay, this is well and good. You can show me how to get in. You're going to show me where the stop's at. What about, objectives, so I can associate the risk with the reward or potential reward, so I can decide for myself, is it worth, putting on a position. Targets are the numbers I just asked you to write down for the most part. If you think yesterday's high or low or today's pivot are not important, you're kidding yourself. If you're trading during the day, day trading, intraday trading, those numbers are important. Go back and look at today's chart and see how important they are. I mean, it's just the market traded right up to daily pivot, pivoted right off of it, went down to S1, pivoted right off of it, went up to R1. It's just like clockwork. So try to move on so I can get to some charts this time and have a minute to show you some things. Okay, so remember I said open, and here's a break between prior session and open of this morning. This is a 3-minute chart, so 3-minute candle, and here we go. We're opening, and clearly you can see the first move is lower than the low of that opening 3-minute candle. So you're starting to think to yourself, okay, well, they're definitely telling me, that long is likely off the table, that short is very likely the correct direction. You start to ask yourself, okay, what's the risk? Well, if that's a 2-minute candle or a two-point range on the candle, and you've got a stop 2 ticks the other side, well, clearly, you're looking at, depending on where you can get in on this candle, you're looking at 2.5, 3 points worth of risk. And if you can afford that, and you can look to what are the objectives. Well, prior session high and close. Remember, we just wrote those down. Yesterday's open, high, low, and close. Those are your objectives. And you look to see that this is, I can't see the numbers, but if you can see that this is a 5 or 6 point objective over and above your 2.5 points of worth of risk, and you think that's a risk reward worth putting on, and you can afford the risk, then you can take this trade. This is an E-mini S&P 500 ES December of 2012 chart, and it's a 3-minute chart. And so we'll go a little bit further. I'm going to get to some charts here that just literally will show you quickly and easily that that you're in trouble. But this one happens to work. These are successive days. They're just working kind of in order not to just walking through the week. I'm trying not to cherry pick anything. I'm just going through the week. Here's another one that opens and starts to trade a little bit lower, and it goes to some objectives. The objective here being this S1 that you can see denoted by the gold over here. For me, I set my charts up where colors speak to me. Red's pivot. Golds are the first tier support and resistance. So you got first tier support right there, objective after breaking lower. Here's another one that actually does trade higher. When it does, it goes directly to daily pivot. Right there to daily pivot. You can see it broke higher, did not challenge the low side, did challenge the high, successfully went to daily pivot. We're going to get some here in a minute that clearly stopped you out too. So another one that just happened to, these are just days in a row. I mean, this one just happened to work. It triggered to the upside, did come back and re-challenge and establish the validity of that level as presented on the open. Also, that's very important as well. But did break higher, went immediately to prior session close as target, and then up here I noted this one as daily pivot in red. Remember, for me, red's pivot, golds are support resistance, magentas are prior session events such as high, low, and close. Whites, by the way, are open. If you see a white line on my charts, like up here, that was an open. Oh, and this one. This is why it's important to let to me, okay, this is the way I do it. And I got people in here that I know, I see names that even tell me that, you know, that they prefer to do this differently. I'm just sharing with you what works for me, okay? And so here's a rule of mine. That is that a one tick little happenstance up here means nothing. It's got to be 2-3 ticks successive break of the high or low of that open in order to signal direction to me. I pulled this chart because I wanted to show you how you can get a head fake there of one tick and it mean almost, well, nothing. And the next one's going to show you that this one actually went to the very tick to the high, challenged the high unsuccessfully, went and actually broke the low, and then went immediately to targets. Prior session close, prior session low, target, target. And let's get some that don't work. Okay, here's what will happen to you, and it'll happen, I promise you, as well as you're sitting there, I'm telling you, this will happen. Here's one that triggers long, gets you long, turns right around, stops you out, and there's nothing you can do about it. It happens. It happens on average, to me, I want to say about 1 day a week. I really think of this as being something that works 4 days out of 5. It worked today, I can tell you. It worked beautifully well today, in fact. Let me pull today's. The low 89.25 off the bell. 88.75 triggers short. 88.75 triggers down and trades all the way down to 83. So can't argue that it did not work this morning. It worked wonderfully well this morning. Actually turned back around and when traded 91.25 off of a 90.75 high off of the open this morning. I'm encouraging you to go pull your own charts. I know some of you, I see a couple of Dougs, I know you're already looking at this, and I know some guys in here that are already looking at this. When triggered 91.25 this morning, that's when I was telling my guys in the room, hey, this is going long. I mean, it's just nothing we can do about it. It's going long, you know. All there is to it. So it worked this morning, I guess is what I'm saying. Actually, wonderfully well. Here's another one that did not work. It opens, it triggers long, you are long. It comes around and trades through the low, and you are stopped out. Nothing you can do about it. It's going to happen, I promise you. And it just is the way the world turns, and it costs you, well, it's going to cost you about 2.5 points on average when this does not work, and it's just the way it is. I'll tell you another little trick here. This is just an observation more as of late, really, than before. But I'll tell you that there's 2 ways to get in this. One, when it breaches the high or the low, you're in. Period. Or if you're trading multiples, one thing that I like to do is for every 2 that you're trading, say you're trading 2 or 20, it doesn't matter. For every 2 you're trading, put half on the break and half on the midpoint of the bar when it does retrace back. What does that do? Saves you about 3 ticks worth of risk or so, which is pretty substantial if you're thinking about a 2.5 point. May even save you 4 ticks worth of risk. But if you're talking about 2.5 points in risk and you're saving 4, well, you know, you cut the risk in half, essentially. So anyway, that's another little entry technique that can help. It would have saved you a little bit of money here because either way you're stopped out. And then you can see where the day trades through, it closes, reopens the next day, and this one happened to work. Boom, break the high, off she goes, trades up to what? Yesterday's high. Target 2, R2. There's daily pivot, R1, R2. There's target 2. Let's see what we got. 5 minutes. Wow, we're doing a lot better this time. I guess I practiced it like really running through this thing quickly the first time because we're doing a lot better this time. So now, having said all of that, okay, that's one way that I like to get things going in the morning and clearly state for anybody that's interested in taking that trade that this is only for those who can take the risk and afford to, you know, to take a bad trade off the bell and still be able to give it a go for the rest of the morning or the rest of the day. That's not for everybody, right? And so if that doesn't sound like you, then maybe just observe or sim trade or something or whatever that first idea, or just don't even worry about it. Something. But there's another trade that we do, and I'll show you even on the charts here, that we do in the room, and this is something that sets up by virtue of the fact that there's a range that's created every day between 8:30 and 9 o'clock. This trade sets up every single day at 9 o'clock. Now, doesn't mean it has to trigger, but it certainly and absolutely, by virtue of the fact that it's complete and ready and set up at 9 o'clock, it'll set up every day. 4 ES points is $50 per point and or $200 per contract. And I'm not sure if that answers that question, but for 4 points in the E-mini S&P, the E-mini S&P trades like this. There's actually, this is a good time to go into this. The E-mini S&P trades in 4 ticks per point. Each tick is about $12.50, and there are 4 of those in a point, so it's $50 per point in the S&P. If the S&P trades for every point in range in the S&P, the Dow futures, and this is how you could use this information to trade something else, like the Dow or the NASDAQ or whatever. The Dow will trade about 8 points in range. How do you know? How do you do that? Well, you grab the average trading range. Let me show you here real quick. Grab the ATR, the average trading range right up here in the S&P, and do the same for the Dow and do the math. Divide the 13 into the 100 and probably 50 or 60 and find that the Dow trades 8 points for every 1 point in range in the S&P. The NASDAQ will trade 2 to 1. The Russell will trade 8/10 of 1 point for every 1 point in the S&P, etc. So you can use my point here being, you can use what I'm sharing with you here to trade any of those other products. It doesn't matter. Just know how to do the math, the conversion, in order to figure out what the range is on these other markets, i.e., and then to associate your stop placement with that as well, because if it's going to cost you 2.5 points worth of risk in the S&P, you can figure out what that equates to in the Dow pretty easily. It's simple math. So at 9 o'clock, we've got what we call well, it doesn't matter what we call it. It's at 8:30 to 9 o'clock, you get the formation of a first 30-minute candle. And I can tell you that over a recent history, there's about 4 points in range from high to low over that 30-minute open, that 30-minute period. All right. So what we like to do is look to be long if the market should trade a few ticks above the open of that bar, and or look to be short should the market, in fact this is one trade that we did today, look to be short should the market trade a few ticks below the low of that bar. All right, we did this trade today. The low of that bar was 87.25 S&P. We got short at 86.25. They were add-ons because many of us were already short because the market was indicating short prior to that. But should you not be one to wish to trade right off the bell, this is another way to do it. Okay, so you can enter in on what is called a stop order. It'll stop you into the market. A buy stop is something you place above the market to get into the market. A sell stop is something you place below the market to get into the market. It's not a stop out, it's a stop in. And so I just probably for future, what I'll do is I'll replace the term. I'll change the terminology there for future presentations. I'll say we enter. I'll just say enter long, a few ticks above the high or below the low. And just remember the averages that I'm giving you, and that is that the average of this 30-minute candle is about 4 points. And so once the market exceeds that drastically, you want to change your approach a little bit in order to limit your risk and just get in on a pullback versus a breakout. So here's the other day. This was Friday, that runaway Friday. And you can see up top up here, the high was 96.5, the low was about 94. You got about a 2.5 or almost 3 point range there, so it was a little bit less than the average. But what happened was the market traded through the high and then starts, to make higher highs. This is a picture, hopefully worth 1,000 words, a picture of that 30-minute 9 o'clock trade that I'm telling you about. That's what this is. All right, so And then your targets, by the way. Targets. Look to your ATR, of course. That's your full session, ATR target. So you can figure if during the session you've been as low as, we'll say 90 or whatever, and you want to try to, you ask yourself, what's 13 points higher? I mean, that's a good target. This is a longer sort of a developing type of a trade. Let's see what else. Oh, here's the last thing. Average trading range, ATR, average true range, average trading range, whatever. It's how far the market trades from high to low on average over an X period of time. That ATR you were looking at right there is over a 5-day period. I want to keep it really short and sweet and don't let it extend out too much. Last thing I'll leave you with is this, and that is that around 11 o'clock in Central in the morning, volume dries up, and I'm telling you straight up, I couldn't hit the broadside of a barn standing in front of it. I mean it. I just shut down. I shut down at 11 o'clock and take a break, and I'll be back at like 12:30 to look at the markets again. So I started doing some looking at what in the world was going on, and you can see here there's a 12-hour period with virtually no trade. It's a 100 tick count chart here, and then look at the next 12-hour period that coincidentally, boom, ends at what? 11 o'clock, right there, where the volume dries up again. And so I thought I would just show you that chart to kind of make the point about, after the 11 o'clock a.m. Central in the morning, just maybe take a break and get yourself something to eat or that kind of thing. If you've got Gracie or somebody wants to post that link again from earlier, I would very much appreciate it. We're going to hop over to another room in a little bit when it invites you. We'll probably get started after the next gentleman speaks. Would like to out of respect for the next presentation, would like to get started after the next gentleman speaks. And if in the event you'd like to join us, I'll post this. There's no charge or anything. But the guy that founded DTI that taught me how to trade, he's going to host an event here in a little while after this next gentleman's done at in our events room, and it'll cover picking stocks and the stop placement associated with those stocks that he's going to show you how to pick. And so with that, I will hop off and out of the way. I'll try to answer some of these questions by posting some text in the chat box to let the next gentleman get started here shortly, please. So let me hop off. Thank Morgan for having me. And I just, out of respect for the next presentation, I need to go ahead and hit to the sidelines here real quick, please. Enjoyed it. Thank you.
All right, great. Thank you, Neil. Excellent presentation. And at this time, I'm going to turn things over to our next speaker, is